Hey everyone, welcome back to my channel. If this is your first time here, my name is Zoe. Today I wanted to go over the main differences between private and federal student loans. So this is information you really need to start knowing about once you've decided, hey, I do want to go to college, this is a thing I want to do, and then you've had that conversation, the financial conversation with your family, and have come to the conclusion that we can't afford right now to pay for that. Either in its entirety, we can't pay for any of it, or we can only pay for part of it, a quarter of it, something like that. This question comes into play when you can't afford to pay all of your college tuition and you need to go the route of borrowing money from somebody else to be able to afford that. So first I'll go over how federal student loans work, and then I'll cover how generally private student loans work as well, and in that kind of give you some comparisons of how they differ and how they're similar. All right, let's get into it. So you've had that conversation and now you're thinking, what student loans are out there? Who do I start borrowing money from? Where do I begin? The first place I recommend beginning your search is looking at federal loans before you start looking at private loans, and I'll get into why I think that in a bit. All right, so federal student loans. Like I've mentioned in previous videos, the way that you'll apply to get a federal student loan is filling out the universal application. It's one application for all the different types of loans that the federal government has to offer, because there are a variety of federal student loans available to you as a student, is the FAFSA, which is the free application for federal student aid. This application is usually due in March of the year before you start college, if that makes sense. So say you're gonna start in the fall of 2020, you would have had to fill out the FAFSA in March of 2020 to have aid that's eligible for you for your freshman year, if that makes sense. You can apply for the FAFSA then spring of your freshman year. So in March of 2021, you could apply for that to then start covering your sophomore year of college, if that makes sense. And you actually do need to reapply for the FAFSA every single year of your schooling if you want it to continue. All right, so federal loans come from the government, just to put that out there, plain and simple. Words can be confusing. So the main thing about a federal student loan is that they can offer you some of the lowest fixed interest rates on your loan, most likely much lower than what a private loan would offer you. So right now the interest rate on federal loans is around 4.5%, which isn't an awful number. It also isn't great. Just think about it as the government profiting off of you going to college and borrowing money from them and making you pay them more money than what you initially borrowed in order to get educated. That's just kind of the landscape we're working with here. Federal loans also offer some types of protections to their borrowers that private loans don't necessarily have to offer you. Those options are things like deferment, forbearance, delaying your repayment for 6 to 9 months after you graduate, and can also offer extended income-based repayment plans. Now, if those words sounded foreign to you, that is totally normal. Don't worry about it. And if there's anything that you would like me to go over in other videos, specifically covering just vocabulary like that, I'd be more than happy to do it. There's no part of our education system that teaches us this type of terminology. And in fact, finance can inherently be exclusionary based on the vocabulary that it uses. It often can exclude the majority who don't have access to tools and resources to learn about this type of thing. And so one of the things I'm most interested in is creating access for resources and learning about terminology like this, because the system has been created to inherently keep people out and keep people away. And one of the best ways to do that is using complex words. So just keep that in mind when you're going through this process and there's things that you don't know and words that don't make sense. There's a reason why, and there's a reason why you weren't taught it. Okay, that's my rant for this video. But so those are some of the biggest factors or benefits in some ways when you're thinking about federal student loans, which are, again, that the interest rate are often fixed and relatively low in comparison to private loans, and that they offer some types of protections to their borrowers for when you can't repay your loan on time or in the repayment plan that you guys had agreed on or that they said you need to pay back by. Federal student loans, like the lesser of two evils. Okay, private loans, on the other hand, the main difference between federal loans and private loans is that private loans are offered by banks or private lending institutions or just other private institutions in general that are completely separate from the government. These organizations, as a result of being considered private, have their own individual way of determining aspects of the loan that you borrow from them. Those things that they get to decide on their own usually are the interest rate, what requirements you need to meet even before you borrow money from them, how much you can borrow from them, what the repayment plan is going to look like, and a host of other things. People choose to go the private loan route for various reasons. One of the main things is that federal student loans do usually have a cap on them. So for me, I took out the unsubsidized federal student loan, which I'm about to come out with some videos just specifically talking about the different types of federal student loans that are out there. So I'll cover, if you don't know what an unsubsidized loan is, that's totally fine. But for me, it was capped at around $28,000, and that worked out for me and my family. We could afford the rest of the tuition. I also got a scholarship. Things like that made it work out, so I didn't have to go a private loan route. But say that isn't your case. Say that $28,000 doesn't cover what you need it to cover, and the federal government isn't willing to loan you out any more money. Once you've exhausted that government route, that's when people usually start looking into private loans. If you are choosing or interested in going the private loan route, another thing to know is that you will have to apply for these loans to each individual institution. So say that you're interested in 5 different loans, you're going to have to fill out 5 different applications. There isn't one universal application like the FAFSA is for the federal student loan program. There's individual applications for each different private loan you're interested in taking out. With private loans, you'll also need to provide them with a significant amount of personal information about your enrollment, your tuition. You'll also have to prove sufficient income, whatever standard they place as sufficient income, creditworthiness, and employment, things that are often incredibly difficult or near impossible to have when you're 17 or 18 and applying to school. So in the case where you can't provide all of that information independent from somebody else's help, you're going to need to get something called a cosigner. Now, cosigners are very common in the money world, or basically like the loan world, I guess, but just in general. So like, for example, when I just recently signed a lease on this apartment, I didn't have the monthly income or like proof of employment that the property management company required in order to be approved to sign this lease. So what I had to do was get my mom to be my cosigner, where she had proof of employment and proof of sufficient income, all of the things that I didn't have and lacked. So a cosigner is someone who can prove things like verifiable income, a good credit score, no signs of past delinquency. But the main role of a cosigner in the student loan world is that they agree to pay your loan if you aren't able to. So say that you keep missing payments, you're delinquent, then the loan owner or the lender will go to your cosigner and request that they start paying off your loan for you. That's a pretty big deal. That's a pretty big deal, especially if you have like $60,000 or $80,000 in debt. So that's just a responsibility to know about. The cosigner, when they're signing those documents, are basically saying, if they don't show up, I got you. And most of the time, cosigners are parents, guardians, spouses, or in some cases, family friends. All right, I know I touched on the fact that private loans can decide what their interest rates are independent of one another and not related at all to the federal interest rate on student loans. Just to give you a number, private loans can range anywhere from 4% to 12, 13, 14% interest. And in a lot of cases, that interest rate isn't fixed like it is in the federal loans. Federal loans interest rates are fixed, so once you get that loan, that interest rate will not change. It's not going to go up to 7% when you... But private loans can. A lot of private loans have flexible interest rates that fluctuate. So you can start a loan at 4% and be like, cool. And then a year, 2 years down the road, that number changes. So that's something to be incredibly vigilant about when applying for private loans. You really ideally want to get something that has a fixed interest rate and isn't going to change on you. There may be some benefits to a flexible interest rate in some very unique situations, but I would say to stay on the side of safety, look for fixed interest rates. But yeah, so those are the two big contenders for the different types of student loans that are out there. And like I mentioned before, there are several different types of federal student loans out there. It's not like you apply to the FAFSA and they just give you money. There's a bunch of different options and they offer you different benefits. So just to name a few, like the unsubsidized Stafford loan, the subsidized Stafford loan, the Pell Grant. There's some parent loans too. I'm going to go over those in videos coming up very soon. So let me know what you thought of this video down below. If there's other information that you'd like me to go further in depth, if there were words that you didn't know and weren't explained, because I know I didn't explain a lot of the words that I mentioned in passing really too. They weren't like focal points of this, like delinquency or forbearance, things like that. I would be more than happy to point you to the resources to finding out what those words mean and how they apply to your situation. Let me know if there's any specific loans or specific aspects of taking out a loan that you want me to cover. And also let me know if this was interesting at all and if you'd like it to be in a different way. I'm trying to figure out how to make these videos like engaging. That's just not by talking head the whole time, but it's hard to think of ways to talk about loans. I'm not an animator. I can't do visual art, which would be super beneficial in these situations to have. So let me know if you have any ideas about how to spice these videos up when I'm talking about very specific loan concepts. But yeah, I hope you enjoyed. Don't forget to subscribe and like and leave a comment down below. I'll see you guys very soon. Thanks.